when I look out my window.
Hello traders, Gary Wagner with the Gold Forecast here. It is Thursday, May the 12th, approximately 11:10 in Honolulu, Hawaii, and this is the daily report for gold. We currently have gold with about 4 to 5 minutes left in trading about $6 higher, 1507, 1508. You are looking as we go into the close of the Forex prior to the break. We are looking at a 240-minute chart. And unlike silver, and silver made a new low last night, gold was able to hold some of the strategic areas that we were looking at. Of course, as we saw this market moved up, our belief was that we were going to get an ABC correction. That ABC should be somewhat either flat or truncated. On a flat wave, you get the A wave, and you get the C wave to really come down and reach the same low. On a truncated ABC correction, you get a scenario which, if in fact this low holds right here, is absolutely a textbook case. You've got the market comes down, it makes its new low, you've got your B wave that comes up just above that 50% level. That holds within all of the strategic things we look at. And then we look at this C wave comes to a 76% retracement of the B. So it seems as though on a tentative basis that traders, we might have in fact actually completed and survived through an A, B, C correction. Of course, we are long at 1488. That puts us right about in this area. We maintained our stops below the lows, and that has kept us comfortably dry. Now, when we look at this 240-minute chart, the one thing that you'll see is that we have had some good strength. If you look at the relative size of these candles, you have had good strength and continued follow through as the trading day progressed, as it moved from the different areas of the world. In other words, as it moved from Hong Kong over to London, and then of course London into New York, and this is where we see that indication of some bottom activity. The other thing that I like, and I am very, very comfortable with, is the fact that when we look at this last candle right in here, this low that we formed, as you can see, it is a hammer. It's the small bodied, it's a longer tail. Now realize, the strategy or the essence behind this candle type here, the hammer, is that as the market came down, you notice that it opens and then makes a lower low, but during the day, what you really see is traders pushing it yet to a new low. But at some point in the market, the selling begins to wane and you get buying coming into the market. And what the buying does is it pushes it off that low, and the significance in this type of candlestick is the small bodied. In other words, the open and the close are very, very close together, and at the same time, it had the ability to drive itself off of those lows back up near the open of the market. It's a very significant candle when found in a scenario like this. There are a couple of things that I look for, and this is absolutely one of them. Of course, we're now looking at our daily master chart with channel lines, Elliott Wave. I currently have removed our Fibonacci retracement because what I really want to do is focus in right now on our wave count. So when we talk about, first of all, our major wave moves, we've got our 3, our correction in 4, and as I said, my belief right now is we are currently in our major 5, our intermediate 3, ended right at this top here. So we had our wave 1, intermediate 2, and then 3, and then we go into wave 4. Wave 4 is of course what we have been tackling with, and we'll go ahead and blow that up so we can see it a little bit better. But as we look at this wave number 4, this corrective wave, it does appear, at least on a tentative basis, that we can obviously our CRA, our B, and then our C ending up right here. So it does seem as though we have some technical evidence at this point that we might in fact have seen the last of this corrective wave. I will certainly want to see some sort of follow through over the next couple of days to confirm that. The other interesting thing is gold, unlike the other precious metals, meaning platinum, palladium, and silver, gold did close higher. You had silver closing off 45 cents, $3 lower in platinum, and about unchanged in the palladium market. So we had an interesting mixed bag in the precious metals markets, but the one thing that we have to be able to say about these markets recently is, if anything, they have been interesting to say the least. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily review and update. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange